What's up guys, welcome back to InvestingPH. Now our market is starting strong this year. From a low of 5,900 last October, now climbed to 6,800. We are almost at the 7,000 level. So will we pass that mark, or is it just another roller coaster ride? This happened every year. In 2022, the lowest was from September to October. Then as the new year comes, climbs up again past the 7,000 level. Same in 2021, as new year comes, the highest of the year. That's why whenever the market climbs, the more I'm careful in choosing where am I investing in, because this is the nature of our market. The highest is usually around January to March, then goes down again. However, this isn't a 100% chance to happen again and again, and we may really see the PSCI move further up the 8,000 level like most analysts always predict, which the last time it was at this level was pre-pandemic. Still, the more I'm careful. I don't buy stocks just because their stock price is rising. This is the biggest mistake a lot of new investors makes. They fear if they don't put more money in this stock, they will miss the opportunity to ride it while it's going up. Yes, this may happen if the stock continues to go up continuously, but we don't know that, and it isn't the only stock out there in the market. Whenever one of the stocks I'm buying skyrockets upward and goes past my buy below price, that's it. I stop and find another undervalued stock to invest in. And I've been doing this for years now. Let me tell you, it has saved me a lot of time for big time losses. A lot of my stocks had this scenario, and if I bought it during its all-time high, then instead of my portfolio being positive today, I'd be down big. Now I'm not saying computing your buy price is a sure way to prevent these kinds of things. There'll be a lot of times that a stock you bought continues to go down, and this happened a lot of times to me, but it has saved me a lot of times as well, and has offset all the losses I've incurred over the years. So as I'm saying, don't get carried away by the fear of missing out on a few stocks. Chances are, no one knows if it will continue to go up or not. If it's already overvalued for your analysis, then just find another stock to invest in. Anyway, now as the market has recovered quite a bit, my portfolio's total value is now 2,570,249, with a return of 14.12%, or 317,999 pesos. This is from my invested capital of 2,252,250. The PSCI from its point when I started investing, which was in July 2019, is still down 16%, and FMETF is down only negative 10.23%. This is where you can see the difference between the returns of the two. Although FMETF is a replica of the PSCI, the fund itself accounts for dividends reinvested, which is why it has higher returns compared to the PSCI chart we see in investing.com, or this site that I always show, which is from Trading Economics. So if you are going to compare your portfolio, the best way is to track FMETF as well, as it shows dividends reinvested. Now more than half of the stocks I own are positive thanks to the market recovering. The negative ones are mostly real estate stocks like FLI, Megaworld, and DTMPR. My plan for the negatives? Well, they are great stocks, so I'd buy more of it as it's so undervalued, especially right now that most of the stocks I own have risen in price and those stocks have a good dividend yield. Now before I dive deeper into my portfolio, I just want to discuss another big news for us investors, mainly dividend investors. This is PIFITA, or Passive Income and Financial Intermediary Taxation Act. To cut this short, this new law will increase dividend income tax to 15% from the original 10%, which is a big increase. Now, for me, of course, I hate this. Just imagine we have a very low percentage of investors here in our country, which in 2022 was only 1.26 million, or 1% of the population, one of the lowest in Southeast Asia. Indonesia has 7.35% of their population that invests, Vietnam 5%, and Thailand approximately 2 million investors, still more than us. Most investors here seek dividends as their go-to strategy. That's why dividend stocks are very popular. So increasing the tax rate would discourage Filipinos even more from investing in our market. Because let's face it, if you rely on capital returns alone, our market isn't doing good on that part. For the last decade, dividends have been the #1 contributor to gains, as our market has been stagnant for more than a decade now. Increasing dividend tax rates would just be a slap in the face for the few Filipino investors. And it's funny that this increase, they say, mainly affects the rich, and they continued that they can reduce the tax exposure by diversifying their investments. Well, how does that mainly affect the rich? The rich can easily diversify, or find another loophole to this tax increase. But for small retail investors like us that are starting, do you have the capability to easily diversify your investments so as not to be affected by this? Of course not. And what I can feel this can do is companies may even decrease their payout because now the taxes are higher. Which will be affected the most? Us retail investors who rely on dividends. This is a funny statement from them. What a great way to encourage new investors to our market. Because when I started investing, that is the biggest advantage of stocks. Imagine, no matter the amount, you're only taxed 10%, and this enticed me to continue forward. So this may be the perspective of some new investors as well. So is it the right time to enact this law while we have such few investors? Isn't this low tax advantage the one they can use to encourage more Filipinos to invest in the market? And imagine putting this law now when the market has been stagnant for such a long time. Investors here are already losing hope. To put this law in action now would flame this even more. So hopefully, I wish this law wouldn't pass through. Of course, again, I'm biased towards this because this affects me, but this can have a negative impact on existing, potential, or new investors here in our country. But anyway, what's my plan for this? Well, do I have a choice? Should I just stop investing if this happens? Well, of course not. Nothing would change. My strategy would still be the same. These are the things I just can't control. It sucks if this does push through, and I hope this wouldn't happen, but if it does, then that's it. Life goes on. I can't just be stuck complaining. It sucks, but I'll continue my strategy. Compounding is still the key to reaching my goal. I treat this as just another obstacle, but I want to repeat what I said. Is this the right time to put this law into action? Now when the PSEI market is already discouraging a lot of investors because of its poor performance for more than a decade, to decrease dividends for me is like taking a bite off the only lifeline left on those already discouraged investors. But anyway, before continuing with my portfolio update, if you're new to investing and don't have any clue on how to analyze companies and where you will get all the data needed, then there is a simple solution for you, which is simply Wall Street. They have graphs, comparisons, and explanations wherein a beginner investor could understand. I tell you, the way they present is so clean and organized. And there's more. They also have a watch list that gives you updates whenever the company releases its dividends, earnings, when insiders are buying or selling, and when the stock falls below its intrinsic value. Yes, they compute that as well for you, which is very useful, but be sure to put a margin of safety. They also have a portfolio tracker that lets you assess the health of your portfolio, detailed returns, and a lot more. So if you want to sign up, they offer their basic plan forever free, and if you do want to avail of their paid plan, then by using my link, you can get up to 40% discount. So try Simply Wall Street. Back to the video. So let's continue with my portfolio update. The stocks I bought this month are MBT, Security Bank, added more to China Bank, as even though this company has a good run already, I think it's still undervalued, and I added a new stock in my portfolio. I'd been hoping to get my hands on this stock for a long time, which is AREIT. It's good that the stock decreased quite a bit, although I can't say I bought it at a very low price, but for me, it's still a good enough price. And of course, this stock will increase my dividends even more. The best part of it, since I have 3 REITs that give me quarterly dividends, this spreads out my dividend income even more. This way, whenever I get new dividends, I instantly reinvest it into another company that will pay me dividends this year. That's what I've been doing for the last couple of years. I'm already keeping that snowball effect moving continuously every month. Dividends will earn me more dividends in the same year, and this has grown my dividends exponentially. So for January, I gained 7,634 pesos, which is 600 pesos more than what I got last year of the same month, and my total dividends received so far is 263,823. For my latest 12-month income is 123,554, giving a monthly income of 10,296. Imagine, as I sleep, I am earning this amount. How great is that? The number to beat this year is 122,969. But I'm not just aiming to beat it, I'm aiming to increase my passive monthly income by about 3,000 or 4,000 this year. So I'm really investing as much as I can to reach my goals. So please don't pass by FITA law, my goodness. But anyway, I end the month of January with this portfolio. The top 5 is left unchanged, with the biggest still Globe at 11.1%, LTG 9.6%, DNL 8%, Megaworld 7.3%, and DDMPR 6.5%. The lowest share in my portfolio is the new stock I bought, A-REIT at 0.8%, followed by Shang 1.2% and AC 1.3%. With that, this ends my monthly update. If you found this video helpful, I'd appreciate it if you click the like button before you leave. Happy investing to all, and I hope all of us will achieve our financial goals this year. Thank you, and see you in the next video.